What's up, folks? Guess who's back? Um, so let me check if TikTok stream is working. Okay, there you go. Live on TikTok, live on YouTube. So I guess let's go. Let's start with the analysis for today. It's Monday, 16th. So no news for today. On Wednesday, we are going to have FOMC statement 2 p.m. So as you can see, price action is already kind of wonky, choppy, a lot of wicks and less low resistance liquidity runs. So let's see how today's New York session is going to pan out. So I guess let's drop. Let's go to the daily chart real quick. So yeah, bias is still high time frame bias is still bearish. I guess we are going to target these lows. And for now, we are still inside this consolidation range. So yeah, what I'm monitoring is this wick. Ah, sorry, the wrong one. This new week opening gap and this wick right here. Okay, so these are the levels that I'm monitoring for today. To be honest, I want to see price trade no higher than this wick's midpoint. So I want to see price stay in the lower half of this wick and then move lower. And it would be phenomenal if we can get a daily close below this wick's midpoint. If we are able to close below this wick's consequent encroachment, then I think we are going to be more likely to take out this low and ultimately these lows. So we'll see. I could also be wrong and we are going to retrace back up into this range. So I don't know. We're going to see. Bias is rather bearish today, so I prefer shorts. So give me a second. Yeah. So that's about it in regards to high time frame bias. Let's drop down into the 15-minute chart. As you can see, price is beautifully respecting the midpoint. And we have these really beautiful relatively equal lows that I think are going to be the draw for today. So yeah, bias is bearish. I think we are going to trade to the downside and take out these lows. So yeah, New York opens in 10 minutes and maybe we can already see the reversal, but let's just turn on the indicator and let's see where the session highs and lows are. So London low has already been taken out. We had midnight high taken out, London lows taken out, but these really beautiful relatively equal lows remain. So yeah, let's see if price is willing to seek lower prices. We have pre-market high, pre-market low. So let's just delete the high time frames, high time frame PD race. So we have pre-market high, pre-market low. Come on. And we have pre-market high. And when we go to regular trading hours, we can see that on Friday we closed here, so we are going to open right around here. So we can expect a huge opening range gap, and you know the protocol in the first 30 minutes of trading, the market is likely to trade down into the midpoint of the gap. Now you are not seeing a gap yet because it's 9:21, and at 9:30 price is going to open right around here. So you will see a huge gap, and if we are in fact bearish, we want to see price fill in this gap. Okay, so that's a plan. We have also relatively equal lows on a regular trading hours chart, and yeah, relatively equal highs. So let's see if we are going to rather see higher or lower prices today. I would prefer, like I mentioned, lower prices, but yeah, we'll see. Let's go back to the electronic trading hours. Minor sell side here. So if we are going to go higher and my bias is wrong, I guess we have to take some sell side liquidity out for manipulation. So we have minor sell side here and pre-market lows here, but yeah. Let's see, market opens in 7 minutes. Maybe let's just review the 1 hour chart. As you can see, we have beautiful relatively equal highs. So that could be the target on the buy side. But if we go back to the daily, and measure the consolidation range, if price is willing to close above this midpoint, this red line here, we are likely to see these relatively equal highs to be taken out. So there are two things. I want the price to respect the levels in here. These premium wick quadrant levels, I would prefer price to stay in the lower half. That would indicate weakness. So I would prefer that, and that would be the best case scenario. Of course, we could also have a Monday, kind of like a manipulation day, where we take out this high, respect the midpoint of the consolidation range, and then we can see lower prices. So there are a lot of scenarios. It's difficult to predict the market in these types of market conditions because, yeah, due to the geopolitical upheaval, the markets are being manipulated a lot, as you can see. They are mostly sharing the same range of the previous day. So, yeah, not too easy to navigate in these market conditions, but yeah. Market opens in 5 minutes. Price still respecting the midpoint of their wick, so we don't want price to trade up into the upper half, stay in lower half. Okay, so upper half would be this, obviously, and lower half would be this. Okay. As far as opening range gap levels, I'm also monitoring last Friday's opening range gap. So these are very important for today's trading, and according to ICT, of course, obviously also the last opening range gaps from the last 5 days. So yeah, these are things I'm looking at, but we want to keep it nice and simple for you guys. So I'm just focusing more on important liquidity pools and important PD arrays. This is going to be one of them. As you can see, price is using it once, twice, a third time, and you can see how this PD array is holding price higher. Okay, so this is 8 a.m. first present fair value gap. Why do I take this as the first present fair value gap and not this one? This is just too insignificant. Okay, that's real displacement, so that's the one you want to observe. Okay, 1 minute to New York Stock Exchange open. That's a regular trading hours chart. Okay, so where do we open? That's a question. Right there. Okay, so you take the open level down to previous day's close, and you see this midpoint, this huge gap. Every trading day, there's a 70% likelihood that price is going to trade down or up to the midpoint of this gap. Okay, so we want to see low prices. Now it gets kind of too many things on the chart, so we delete this opening range gap, these levels. So for me to take shorts, I want to see manipulation higher, take out relatively equal highs, and then I would be looking for short setup. But yeah, let's see. What I don't like, usually when I'm looking for short setups, I want to have this scenario that I'm drawing out for now. So if I want to go short, I want to see price lower, higher low, lower low, lower high, lower low. Okay, and then I want to have some type of relatively equal highs, take out these highs, go short in here, and target these lows. Okay, but that's not the scenario for right now. Instead, we have this scenario where we have high high, higher low, high high, higher low. Okay, and usually I don't want to be the one who's picking the top in the bull market. Okay, so I don't want to take shorts usually when price is moving up. Okay, so I don't want to pick the top in the bullish market, and that's basically what I'm expecting right now, because that's, for me, it makes most sense to target these relatively equal lows. But we are still in a bullish intraday market. Okay, so in these type of scenarios, are more likely, or I'm likely to be wrong more often. So let's see. So we haven't taken out some kind of SASA liquidity right now, so that's good. We manipulated buy side, so now I'm looking for at least this sell side to get swept. If not this one, that's pre-market lows. Okay, time-based liquidity, and ultimately these lows. If price is going higher, of course, we have these relatively equal lows right here, but these are, yeah, that would be enough to trade higher. But yeah, I guess if price wants to go higher for today, I'm not participating in any longs, so then price is going to run without me. I'm still looking for shorts. So let's see. It's also the first day of the month, the first day of the week. So no reason to rush in into these markets and take a trade. What's up, Mikhail? What strategy? So I'm trading ICT. As you can see, fair value gaps, auto blocks. Hmm. Let's see. Bro, the volatility that comes in at 9:30 is insane. I mean, compare these candles, the size of these candles, with these ones. I mean, the displacement here is eight handles. The displacement here is 25 handles, and that's still small. See how at 9:30 this candle, weak lower, but look, the body's respected the low of this fair value gap. No first presented fair value gap for now. Ah, bro, price action today is not the best, but not the worst. So still no first percent for Valia. That's crazy. If you go to this workspace, okay, and go to the 15-minute, oh, we are already in the 15-minute chart. Here you can see all these opening range gaps. So relatively equal highs, opening range gap portion that is unfilled, so that's a huge draw on the upside, okay. And these relatively equal lows, this opening range gap, I definitely want to see lower prices, but I have an inkling like these relatively equal lows could also remain intact for a longer period of time. I'm still preferring and looking for shorts, but I'm not that comfortable in reading price action or predicting price action or predicting shorts in the bullish intraday market. Okay, so yeah, let's see. No first percent for value gap. Uh, I need to go to the bathroom real quick. Give me a second. Nee. First percent fair value gap right here. So if price is actually wanting to go higher, this first percent fair value gap here will hold price higher, okay? And if we trade below this one, below this first percent fair value gap, I guess we can start looking for shorts. No, I don't guess. Then we are looking for shorts, okay? So price is still above this first percent fair value gap and above pre-market highs. So let's see. But yeah, that's what I was saying. Um, we make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high, higher lows. Okay, consolidation before the market opens. Market opens here. A little manipulation to the downside. And now we continue making higher highs and higher lows. Again, being the one who picks the top in a bull market to go short from is not easy. Is not the thing I would recommend you. Definitely not in the beginning. But I have a game plan, and I think I know how to navigate in this, yeah, market structure. So that's the reason why when the market is in these types of scenarios, I wanting I want to wait for confirmation. Okay, so I'm not taking the first trade opportunity to go short. I want to like this. Okay, I don't want to pick the top in a bullish market. Okay, so what I'm doing is I'm looking for now a market structure shift. And like I told you, if price is closing below this first percent fair value gap, we are looking for lower prices. Okay, so what I'm looking for then is a trade up into it, using it and confirming it as an inverse fair value gap, and then see displacement lower, and that's what I'm entering on. So that's a plan. Um, so yeah, this gap is still unfilled. Okay, so this draws price into it. Um, yeah, let's wait and see. Like I mentioned in the beginning, we also have FOMC on Wednesday, so that's not making it easier for us. But we do our best to manage risk, and yeah. Hmm. Okay, price going deeper into the favela gap, but still respecting the midpoint. Seems like we inverse the first pin favela gap. Let's see. So this is initial sell side. Bro. And this is initial buy side, okay? Why? The first 30 minutes of trading, the opening range low. I guess that would be the opening range high. We still have 5 minutes until 10 a.m. But for now, this is the opening range high. So lots of sell side liquidity right here. Boring opening so far. But look what price is doing, okay? So price, this is an imbalance, okay? So it's a buy side imbalance, sell side inefficiency. That means it's lacking sell side delivery, okay? Now this is sell side delivery. These yellow candles, down close candles. Now price is making the upper half of this first presented favela gap efficient, okay? It's offering several times the same price here, okay? If price is now willing to inverse it, the favela gap, the upper half is already being efficiently delivered, okay? So in that case scenario where you have imbalance making the upper half efficient, Then this place lower, price only has to or needs to trade in the lower half because this is still inefficient. Why? We don't have lots of sell side delivery in the lower half. Okay, so you would want price to only trade into lower half, respect the midpoint, and maybe doesn't even demand price to trade up into the midpoint, stay in the low half and go lower. Okay, so that would be the scenario if we inverse the first percent fair value gap. That's not happening yet. Maybe we won't see it. I'm looking for this to become an inverse fair value gap, but we'll see. Okay. Dow is skyrocketing to the upside. S&P 500 is also stronger than Nasdaq. So Nasdaq's the weakest one so far of these three averages. Let's go back to the 1 hour chart. To be honest, when this day opened today's trading day, I wanted price to respect this new week opening gap, respect it here, and then go lower. And that's in other market conditions that would have been the case probably, but bro, this consolidation range is just lasting for so long now. I just want to get out of it. And also this new week opening gap right here, this little gap, I would have preferred price to open up even below this midpoint, but we didn't. We had a nice little discount opening this week. But I really wanted to just price to just dump. But yeah, I wanted to see it here. Price also traded lower, but you see it closed above here, and this only is a wick. So tried it once, wasn't able to close weak, traded up into this consolidation range. We had some nice down close candles, trading down to the midpoint, failed. Now we are retracing higher. Oh, just get out of this damn range. Come on. There's some kind of bullshit we are in right now. I still want to see this fair value gap to become an inverse fair value gap. And in my opinion, if price wants to take off, it wouldn't retrace that deep. I mean, first percent verwaltige up displacement. We traded down into the lower quadrant. We have taken out the high again, but only price is wicking above this high, and look where it closes. Okay, we don't see strong bullish candles closing strong without creating premium wicks. Okay, so that doesn't look too bullish for me. Still, sell side is my target. Okay, relatively equal lows. These are beautiful relatively equal lows. And also, if you have watched the last 2026 mentorship videos from ICT, he said whenever you trade pre-market or New York session, you definitely got to let's delete this one for a second. You definitely got to look at overnight session lows. Okay, what does he mean by overnight session lows? 7 p.m. to 5 a.m. Okay, so that's Asian range, Asian session, and as you can see, we have beautiful relatively equal lows. Okay, so I'm still of the opinion that this is a manipulation. Okay, we are at the beginning of the week, and on long term, prices wanting to go lower. That's our bias. Okay, so of course, smart money doesn't want to have everybody participating in the move lower. Okay, the move lower will be the real move. That's going to be low resistance. That's going to be a sufficient, no, not a sufficient, a sustained price run. Okay, you're going to see these ones on the downside. So still, I can be wrong, and I'm fine with being wrong, but I'm viewing this as a manipulation. Okay, so we had midnight here. Okay, so midnight is always a huge draw for price. Okay, and since we are in a consolidation range and we are not in low resistance liquidity run conditions, midnight acts like a magnet. Okay, and of course, if we are on low resistance liquidity run conditions, you want to see midnight, see consolidation, manipulate lower, and then just see price take off to the buy side. Okay, like in this scenario, we have midnight, manipulate lower, London creating the low of the day, and then skyrocketing to the upside. That would be the scenario for low resistance liquidity run conditions. But as you can see on a daily chart, we are definitely not inside a loose market. Okay, so that's the reason why I think we open here, midnight opening is here, today's opening is a little bit lower, but I guess just a concept of power of three. Okay, open, high being the manipulation, low, and close. Okay, consolidation, manipulation, distribution. Go back to the 1 minute. I mean, if you want to go short, feel free to do so. I'm not. And I'm not acting like a financial advisor, okay? So I'm not giving financial trade advice. So please do not take any of what I say as financial advice. I'm only sharing my own opinion, okay? So I'm not telling you to buy or sell. I'm just reading price action. And this still doesn't look too bullish for me now, okay? So let's see and stay patient. Stay patient. Interesting. ICT's nuts. Ah, there you go. I want to say that ICT is not active on X right now, and in the same second, ICT is posting a trade. Okay, interesting. So ICT went long in here. I get no ICT went long in here and took it long from here to here. Took a partial stop loss below the midpoint. Actually, no, stop loss was at 24,697. So he would have been stopped out in profit, but his stop loss order didn't get hit or engaged. I don't know. So he's still in the trade. And he went long. Okay. He's targeting a first percent fair value gap. I guess that's New York first percent fair value gap. The 12th, which is last Friday. I think it is. No? The 12th was Thursday. Okay. Last Thursday. That's what he has on his chart. So he's bullish. I guess maybe my bias is wrong for this session, but I gotta be honest, bro. I wouldn't want to be in a long in here. No, I'm fine with sitting still and doing nothing. I'm fine with that, bro. It feels like lag day. Talking about lag day, bro. I was in the gym today in the morning, hitting legs. Goddamn, bro. Monday lag day for me is horrible every time, but I guess you gotta smile through the pain. So yeah, like I told you, I want to go and look for short setups. If we are able to close below this first percent fair value cap, that never happened. Okay, we respected the first percent fair value gap. Now we traded in the lower half, which is permissible. Why? We are still in this 2 week of time window where the daylight saving time shift in America started like a week ago, and in Germany the daylight saving time shift is, I guess, in a week on Sunday. I'm not sure. It's towards the end of March. So in this time, you should expect precision to be a little bit off according to ICT. And we also have FOMC on Wednesday. So price tends to be a little bit more choppy and a little bit more less precise. So yeah, let's see if there is, or waiting a short setup for us. I mean, yeah, still not wanting to be long, bro. I want to go long in these types of moves. And in this case scenario, I'm not expecting price to behave like in here. Okay, so this is just mostly moving higher without any deep retracements. And in today's New York session, we don't see these types of up moves to the upside. So, but yeah, for sake of reading price action, first percent fair value gap, these and these consecutive 3 down close candles, that's an auto block. Okay, price trading down into this auto block, respecting it. So this becomes another auto block inside of an auto block. So this is a propulsion block. And as you can see, price for now is respecting the open of this auto block. So yeah, let's see. Opening range gap still not traded to not traded to bro, I'm tired. I don't know. I didn't have a good night's sleep tonight. I don't know. Mm. Yeah. If you're bullish, for example, you want to see down close candles, support price, and that's what we are seeing so far. Down close candle, support price. So for us to take a short setup, bro, what the flip is going on right now? I don't know why I'm so tired right now. But yeah, you don't wanna. I want to see down close current candles be disrespected and turn into inversion fair value gaps. For example, if we now see a market structure shift, these 3 consecutive down close candles are now in our auto block. But if we see a market structure shift, these become mitigation blocks. Okay, so mitigation blocks are also auto blocks. That would not be a breaker because that's just a short-term low. This low is not taking out sell side liquidity. If you would see something like this, high, low, higher high, lower low, and then again a higher high, these up close candles, that would have been a breaker. Okay, now put it the other way around. If you are bearish, you have high, low, higher high, higher low, higher high. Now you would want to see price to make the low not in here, but in here. And then just um, retrace up into the highest um, up close candle, which would be this highest down close candle, sorry, and that would be your breaker. Bro, what the yeah, awful first day. So the target, ICT's target is last Thursday's first percent fair value gap. I do monitor it on another screen, but for you guys to be aware of it, that's the one he's looking for as a target for his long. So ICT went long in here during the macro first percent fair value gap, and yeah. But it kind of confuses me that he's taking this setup, because normally he's waiting for the real good setups where even, bro, he even in high resistance liquidity runs, high resistance liquidity run conditions, bro, he picks the exact time right before it becomes a low resistance liquidity run. So he just picks low resistance liquidity runs in high resistance conditions. Bro, I don't know how how he does it, but it's insane. So I'm kind of wondering why he took that, because that's like awful. What is this, you know? So bro, what's going on right now? Um, so yeah, bro, it's kind of dark. Let's put on some light. That's too much. That's better. Okay. So yeah, we are stair stepping higher. Um, yeah. The question is if we are going to see a maker sell model in today's New York session. That's a question. Usually, market maker sell models form, or the reversal point is being made or created after 10:30. That's not something ICT said, but I found it to be true that looking for market maker sell models and participating in market maker sell models is more effective towards the latter part of the New York session. So after the first hour of trading, and that means I'm looking for market maker sell models or market maker buy models, depends obviously on the market structure, after 10:30. So usually 10:30 to 11, and especially 10:50 to 11 to 11:10, the macro time window. That's the time window where most of the times the second stage distribution happens. So the real juicy run of that market maker model. So yeah, but I guess we are just stair stepping higher, and we'll see if we can get a reversal point. At last Thursday's first percent fair value gap. Okay, so this is today's first percent fair value gap, and this is last Thursday's first percent fair value gap. It definitely is a boring session. Ugh. Bro, I hate fucking Mondays. I mean, we also had 8:30 news, but I gotta be honest, 8:30 news wasn't really a volatility injection. If you look at this here, price action 8:30, didn't really happen too much. Basically just consolidating, moving sideways. 9:30 opening, manipulation lower, manipulating only minor sell side. I mean, that's enough, but that's not disrupting the market sentiment that was in place at this point in time. So yeah, but that's still enough. It's still sell side, relatively low. So yeah. Ah. Awful session. what aligns with this Thursday first split for value gap? What is this level? 24,773 and 24,792.75. 73 and 70 and 92. So okay. So first percent fair value gap is on top of Thursday's opening range gap low. Relatively equal highs opening range gap unfilled portion right here. Okay. Yes, sir. No trades today. Thursday, what's the date? Let me see. Thursday was 12th. Oh, initial buy side. Open range, quadrant levels. Respected the 8th. Okay. So we failed to trade up into the first percent for value gap. Failed to trade up into opening range gap from last Thursday, March 12th. 12th. Hey, bro. This pronunciation, I don't have. Fuck it. Yeah. Uh, Hmm. Do we get the close below? Yes, sir. I mean, it's still difficult for me to take a trade because the volatility is so high. Okay, that would have been actually okay. Only 30 handles. So side is still in here. So if you measure from high to low, midpoint is here. So now we are already in a discount. But since yeah, I mean, no, that's a good sell side liquidity pool. So if we want to go short, we want to do it inside of this first percent fair value gap. Come on, dog. Yeah. Okay. Seems like we may get stopped out in here. Stop loss above this week's midpoint. Respects the midpoint of the first percent fair value gap for now. um, NG was a little bit aggressive. Um, I explain. I explain it in a second. I just need to focus on reading price action for now. If price trades below this opening, I'm going to trim my stop loss. I want to see a closure below this candlestick's open. Let's see if we can get it. So order block respected. There you go. This for value gap. Watch it. Okay, I'm trading my stop loss below break even. I don't want to see price come back up. Or maybe, okay, we take this order block right here. Stop loss at, oh, nope. Stop loss at, yeah, one take above the midpoint. Yeah, okay, that's below break even. So I want to see price remain weak. Institutional order for entry drill on the 30-second chart here. Right there. Let's see. Yeah, I forgot to press the record button. To yeah. Normally whenever I'm live and I'm taking a trade, I also record the trade to be able to make a video and post it for you guys, the executions and stuff. So trade it back up into fair value gap low level. So price is respecting this opening level from the opening range gap. I want to see price close below the short term low and consume all of this wick. Also create this wick, and I don't like that we respect this midpoint, and that's the disadvantage of trading with one micro. I'm definitely for trading with one micro, but if I had if I had two micros on, I would have taken a partial at this wicks midpoint here. We are not able to do so, and I want to hold for this sell side liquidity. So I mean, stop loss is at break even, below break even, so there's no risk. So I want to see price get heavy. I mean, how many handles do we have right now? So my daily goal is 40 handles. I mean, that would be 40 handles. We have the opportunity to make potentially 70 roundabout. So we are respecting this fair value gap so far. So I guess I'm holding on to the trade. If we go to electronic trading hours, that's the opening right here. That's a close right there. So can you see how we are only able to wick up above this opening level, but the body is respected so far? That's indicating weakness. And now we've traded up into this fair value gap again. Let's see where the body closes. It's 10:46, so price could also be waiting for the macro to eventually deliver the move to the downside. I'm completely content where my stop loss is. So if I get stopped out, I get stopped out. So let's just cancel encroachment, delete the opening range gap level for a second again, and focus on recent price action. Order block right there. Price traded up into order block. Failed to trade up into first and fair value gap low. So now I want to see price remain heavy. Fair value gap midpoint respected so far. Low, high, low. So we have a swing high right there. I mean, yeah. For now, everything is on our side. $10.47, huge displacement. Wow. Okay. Okay. Now watch this candle. candles wicks midpoint. Okay, traded through. That's a good sign. Now I want to see price remain heavy and just dump into my take profit. Nobody's watching on TikTok. Perfect. Okay. Come on, dog. Another order block right there. It's not easy in these types of market conditions. Uh, so Dow already has taken out this low. So Dow's the weakest one. S&P more or less like NQ, meandering around inside of that wicks range. So let's see. 1050. There you go. Come on, boy. Dog whistling like ICT. Come on, come to Papi. Oh, the hell? Yeah, perfect. We didn't get filled. Ah, I love it. Bro. Bro. Come on. Give me the fill. I don't want the price to retrace on me, so I'm locking in profits. Bro, this is hilarious. Oh. Hell no. This is insane. This is really insane. I mean, what the? This is hilarious. This is insane. This is fucking insane. This is fucking insane. I gotta be honest, I never had I never had price waking so fast into my profit. Yeah, okay, no. Obviously, I think everybody had this type of scenario where price was wicking so fast and to take profit that you didn't get through. Okay, shit happens. Okay, but I never had price doing that and then retracing on me. It always was like, okay, too quick, and then but price would have filled and consumed this wick and then went to my take profit. Now I didn't got fill, I didn't get a fill, and then price retrace on me. That's bro. Um, so we would have made. Wait, give me a second. Let's turn on executions. Okay, I went short in here. I went short in here. Okay, stop loss here. So I risk 40 bucks in order to make 120, no more, probably like 140. And bro, instead of I made 40 bucks. That's insane. Okay, it's 10:56. Bro, it's really hard not to get mad about this right now. I gotta be honest. Bro. Hell no. God damn. Hmm. Mm-hmm. Yeah. Whatever. So we had a little bit of heat. Okay. Um, almost got stopped out. I would say that's That's some precision right there. Okay. Yeah, I'm going to journal the trade right now, and yeah, I guess that's it for today, guys. See you tomorrow. Tomorrow it's the day before FOMC, so yeah, I hope price action tomorrow is not too bad. We'll see. But yeah, definitely catch you guys tomorrow, and I guess be safe. See you tomorrow. Ciao, ciao.